Keith Uti and Rich mortgage expert extraordinaire. How you doing, buddy?
I'm fantastic. No better way to end the year and get ready for a start one than talking about mortgages, is there?
You know, it's interesting. Stephanie and I on our podcast, the Everyday Millionaire Mindset Matters, you know, one of the exercises we encourage people to do is about completion. So, you know, how are you ending one year? What are you going to take with you into the new year? And what are you going to leave behind? So when we look at the mortgage industry in 2023, I mean, you are the top of your game in terms of mortgages. You've played in that space for many years now. You're investor focused, which is not to say that you don't do all sorts of mortgages, but, you know, investors really are your specialty, you know, residential, commercial, multifamily, res, whatever it might be. But when you look at 2023, you know, what would you say is some of the oversights that you've seen in the investment world by investors? And I don't know if that's quite right, the question, but let's start there and see where it goes.
Yeah, you know, so I would say that I've had many clients that still found great opportunities to buy cash flowing positive properties in 2023. Whether it was, there's those that were patient and found them, but then there's those that were active and driving and trying to find them and found them and move forward with them. I will say, I think I financed more fourplexes in 2023 than I have in previous years, for sure. And I think that's because there's people who have owned those properties for many years that were waiting for values to come up a bit. And they were prepared to exit. And many of those were under rented, need repairs, and the people didn't want to put the money in. So it was a great opportunity for investors to buy using purchase plus improvements or other strategies to get into those properties. So certainly opportunity is still there for those that were really being strategic and active.
Well, I think, you know, you make a really good point. You're talking about fourplexes, but let's face it, given the price escalation over the past few years, I mean, you have to get into that multifamily space. And I mean multifamily as in duplex, triplex, fourplex or more. But, you know, let's face it, to get cash flow, you know, single family is not going to do it. You actually had to kind of unpack it. You had to either super suite it, or you had to add a suite, or you had to do something in order to get that rental revenue up to accommodate, you know, the rising costs, including the rising interest rates on mortgages. Let's go back a little bit. Let's kind of work our way across the country a bit, Keith. You know, when you look at what's happening in Southern Ontario, we look at, you know, some of the challenges that people are facing. So, for example, in the pre-construction space, and I'm not just talking about condos, but primarily condos, but we also see that in, you know, single family detached or the detached space. I mean, there's a lot of headlines that are going, we're in a bubble, real estate prices are crashing and burning. I mean, there's a lot of, they're down 20%, 30%, in some areas 50%. And when you actually do a little bit of homework on it, that's true, but they're also comparing it to all-time highs. You know, they're saying it's down 30% from the peak of 2021, early 2022. But when it comes to mortgages, from your perspective, whether it be in Ontario or anywhere in the country, what are you seeing in terms of those that did a pre-construction deal and now are bumping up against a wave of, holy cow, my property doesn't appraise for what it did. Now what do I do? Are you seeing that within the scope of work that you're doing?
You know what? I saw a couple of them, but it's interesting. I think many of the developers that were developing those projects in Ontario really slowed their completion on it to not put their buyers in that position because they know that just creates more problems. And the last thing they need is now a bunch of lawsuits and different things that they have to take on because buyers can't get their financing, whatever. There are a couple of lenders that, you know, in the B space that will use the purchase contract price or in higher appraised value. However, you know, that's not the solution for everyone. And I found that it seemed like a lot of developers really seem to slow their pace to get into completion, hoping that things will shift in the market before they get there.
Let's face it, 2023 has been pretty tumultuous in terms of what's going on in the mortgage industry and in the real estate industry. And as much as, parts of Southern Ontario really took a hit, I'm seeing many, many really great deals being done by savvy investors who've been patient, who are looking for those deals. So as much as we live in this kind of uncertain world, it is in the uncertainty that people that are uneducated or educated and are taking their time can find really great deals, because there are certainly some motivated vendors out there. Now, when you look across the country, we have to shine a light on what's happening in Alberta. They joke that I'm Mr. Alberta, which is probably somewhat true, but ultimately I try and be quite agnostic about it all. I'm just looking at the real estate world, the economic conditions, and we started talking about Alberta pre-pandemic, but ultimately we looked at the market in Alberta, and I've been saying specifically Calgary for 4 years. I've been beating that drum as hard as I can. You're seeing some great opportunities in there and working with investors. Now, when you look into what has transpired over 23 and then we look into 2024, what are you seeing for Alberta as a broker, and how the bank is looking at deals in Alberta as an example?
Yeah, so for once, lenders are looking at readjusting things like their loan to values, for investors on rental properties, maybe for refinances or purchases that are out maybe in that B lending space, or or a refinancing in the A lending space. Purchases, that's pretty consistent, but seeing lenders now talking about making some adjustments to be more favorable for Alberta, because they've always just been so conservative here. However, I would also say that when we look at the Alberta market, depending on what headlines you read, people see, a house has gone up this percentage and that percentage. And we have to, I believe we have to take those with a grain of salt, because we were flat. We really saw nothing from 2015 to 2021. So if you take what should be a consistent kind of 3% home increase, from 2015 to now 2023 at 3% a year, that's 8 years. That's 24% that the prices should have gone up. From 20, consistently, if we had been consistent. So our prices are not that out of whack. If you break it down and think about it from the perspective of, if we had a true, just gradual growing market like we should have, we would be somewhere near where we are now. And so it's not that we've seen this excessive growth, it's that things have finally caught up to us, whether that's through immigration, whether that's through GDP and economic development, and some shifts in our economy as far as the types of, IT and transportation and those things. So, there's some things that are positive about this in perspective, right? I think for 2023, if we look back, that would be a word that I would use with people I've worked with, is perspective. Having a perspective around what's going on that's not necessarily just driven by headlines.
It's interesting about the headlines, because, there's some people out there that are calling for a huge crash in Calgary. And so I know we didn't talk about this in terms of the discussion that we were going to have, but I have to say, we've got some viewers out there. So, some viewers, if you put it in the chat, let us know that you're listening. But when we consider, Keith, Calgary economically remains strong. You've got great leadership with Danielle Smith, and that's a huge impact on what the province is doing, those decisions that are being made. And I know it may get or sound a little political, but ultimately it is. Danielle Smith is a great leader. She's making strong decisions, I believe, for what's happening in Alberta. Now, this is all to say is that, the sky is falling because prices have risen so quickly in Calgary, and arguably quickly. I mean, there's and a lot. My point is this, back to what you said, is that you have to look at previous to that. In a lot of ways, we're just catching up. The economically, Alberta's remained strong. You've got huge immigration coming into that province. You've got skilled labor coming in. And of course, oil and gas industry is being very, very robust. But the economy is really quite diverse. So I don't see, at this point, I'm not seeing any indication that immigration won't continue. Cost of living is a huge driver. So when we go into that, I want to ask you something that maybe, because you're in it, and I don't want to put you on the spot, Keith, but one of the things that I'm seeing is a lot of development, new house, new home building, new rental product, being built. And I'm not worried about it, but I'm saying, hey, listen, we got to pay attention to that level of development. There's a lot of stuff, a lot of construction being built. As a matter of fact, the strongest across the country. Are you concerned about it, or do you see it as, I better pay attention to this? I mean, you're an investor, you're a very accomplished investor, and you're seeing and you're talking to lots of investors. Any flags for you in that conversation? As I said, we didn't talk about this, but I just came to me.
Yeah, I think so. When I drive around the city and I see the cranes and different things around, I'm certainly looking at what stage of development are some of these places in.
Yeah.
And what size are they? And is that, what impact might that have on rental values? But what we don't see, and I think there's two segments. There's these big complexes being built that are apartments that are going to be 1 and likely 2-bedroom apartment complexes.
Yeah.
And you don't always have the same clientele that's going to rent there, that's going to rent a house in a basement suite. Because they have sometimes different needs, right? They're pet lovers versus not pet lovers. They want a garage versus not a garage. Different things, right? Maybe they're more transient versus solid in a job, or student versus not student. Different things like that. So I think that is a big part of looking at these things. Our vacancy rate is near zero. And we know that a balanced market where rents can gradually increase and tenants can get gradual increases in income is in that 3 to 4% range, is even up to 5, is a pretty good market. So, but then you've got all this immigration that the government is not giving any indication that they're slowing down, and people are going into other cities, Vancouver, Toronto, Montreal, seeing how expensive it is, and they're going, well, we've got to move somewhere less expensive. Is Calgary less expensive right now? Maybe not. But based on what they can get for a job and income, yeah, maybe it still is. And so it's going to take, I think you've always taught us, all these things take time to work their way through.
There's a lag.
There's a lag. I mean, if we had 4,000 units coming online at the same time at the end of June in 2024, would there be impact? Absolutely. But they're not all going to come online at the same time. And so we're going to see a gradual absorption.
Okay, so I got a little bit off topic there because, but I think it's important, when we look at Alberta as a province, when we're speaking to investors who are listening to this, I remain very bullish on Alberta overall. Calgary specifically, a lot of people say, no, it's reached its peak, it's doing this, it's doing that. No, I disagree. And, I'm looking at just the economic fundamentals, taking the emotion out of it. I do want to shine a light on, Medicine Hat, Lethbridge, and, certainly when we look at what's happening in Edmonton, and, you can look at data, or you can just look at the history, and Edmonton mirrors Calgary with about a 12 to 18 month lag. So, for those investors who are looking for an upside, I'm still pretty bullish on Edmonton, although I have some concerns just around the political environment, and that's just me. Now, let's get on to a couple things around mortgages. One of the things that we talk about, and, my theme for 2024 is that clarity equals velocity. And when you are clear, when you make decisions in terms of your partnerships, your relationships, when you understand where you are financially, when you actually have a vision that's clear, when we look at who we are as people and investors, the clearer we are, the more or the quicker we can make decisions, and the more velocity we can grow into our financial future. Now, having laid that groundwork, one of the things that I've seen over the years, and I'd like you to speak to a little bit, is that, in order to know where you're going, you have to know where you start. And I often use the metaphor of when you get in your car and you're going to go somewhere, you're going to go downtown Calgary, the first thing your GPS does, your Waze or your Google Maps, it says, well, where are you? Let me know where you're at, and I can choose the best route for you to go and get you there the quickest. And so when it comes to financing mortgages and qualifying for loans, I stress often, we need to know where we're at. So somebody like you can look at it and go, okay, I see where you're at. Let me show you the best route to get to where you want to go. And let's work around the construction. Let's work around the radar traps. Let's work around all of the things that are happening on the road to get to where you want to go. But I need to know where you're at. So I see that as an oversight by many. How do you view it when you're looking and speaking with your investor clients?
Yeah, you know what? I've done that for years, but I think it became even increasingly important for people to have those conversations in 2023 to help them figure out their own clarity, because they're seeing headlines and they're reading certain, just reading stuff, being told stuff by people who aren't necessarily in it day to day, family, friends, whatever. And so being able to have that conversation where they can talk about unedited their situation, what's going on for them, what concerns they have, and what are the strategies, possibilities, opportunities, and solutions that they could consider for their situation. Whether that's staying pat, whether that's where you should just sell this, you should sell this thing because it's killing you. We should look at, redoing some things, whatever that is. But that's what I would say is so important, is we need to have that start point and then look towards creating a financial future by design when it comes to looking at the mortgage as being part of that. It's so crucial.
When we look at what the banks are doing, are you seeing a shift in the banks in terms of overall mortgage approval rates, and or are they looking for more detail? Is there some insight that you can share with investors saying, okay, if you're going to go to when you go to get a mortgage, here's what you need to do? Of course, we want to be prepared in advance of writing an offer, even so that you know how best to write the offer. It would be assumptive to go, I'm going to write this offer based on financing in a robust or a hot market like Calgary right now. It may not be the best strategy, because that could drag it out. That may, in fact, kind of take your offer and shorten or take it off the table if you've got to wait around for financing approval, for example. So preparation in advance. But what are some of the one or two things that people need to pay attention to, Keith?
Yeah. So for whether it's investors or somebody buying a primary home, they need to be aware of what their source of down payment is. Mm-hmm. And if they are moving money around to try to move money from 3 or 4 different accounts to put it all in one account so it's consolidated, know that if that's happened within the last 90 days, we're going to need the sources of every large deposit that moved into that one account from all those other accounts. Seeing that a lot right now, and people not understanding. So I don't care if you have your down payment in 4 different accounts, fine. You don't need to move it for me. It actually makes it more complicated. I'd rather have 90-day statements from 4 different accounts to be able to show there's 10,000 here, 8,000 here, 20,000 here, and 30,000 here in 4 different accounts, rather than you moving it all into one. Then I have to go and find the account and match that transfer from that account and transfer from that account and explain it all to the underwriter. So that's number one. And number two, the documents that we ask for when it comes, if you have existing rentals or existing rental income coming in, they're going to ask for it. So, be prepared to provide documents showing all transactions, nothing blacked out. Mortgage fraud, in a high rate environment, mortgage fraud increases. So their risk tolerance and their desire to reduce mortgage fraud becomes even greater. So the documents, they are more picky on documents, and mortgage fraud is just something that becomes, unfortunately, we all become the victim of those that are criminal, and we are those that are honest are the ones that pay the price for having, for that happening. So
mortgage fraud has certainly been a big topic. When we go forward into 2024, but before I go to 2024, you talk and you make a statement about controlling your real estate, and what does that mean? What does that mean from your perspective?
Yeah. So one of the things that for investors, they often, they they look at, oh, I don't want to pay that interest rate's too high, or that I don't want to use a B lender, I don't want to use a private lender, whatever it is. Even though it might be the right deal and it might be positive cash flowing using that, they can't get over themselves to pay that rate because it seems unfathomable. But we have to remember, when we're real estate investors, we're building for the future. And the number one way you build your wealth through real estate is having control of the real estate. So find a way, if it's a great property in the right location and it can still positively cash flow, get control of it. Get control of that real estate so that you can start to build for your financial future. When was the best time to plant a tree? Today. And yeah, it might grow a little tiny bit at first, but there's going to be spurts in there with the right planning and the right plan in place. So that's, for me, what it means to take control of real estate. But the other aspect of control real estate, and this is one of the conversations I had a lot this last year, is look at how you're writing your leases and adjust and change how you're writing your lease agreements so that they can be more beneficial to you. Doesn't matter what province you're in. Look at how you're writing your lease agreements and adjust them. Fixed monthly rate utilities so that you can use those in qualifying. And utilities being such a huge one across this country this past year, being able to then having utilities addendum so that you can adjust it with 30 days notice, that's huge. If you suddenly, we had our utilities expired at the end of October. We had to go from 5 cents to 12.49 cents on electricity or whatever it was. Being able to then send that adjustment to the tenants so that they know the reason why, and not having to wait 90 days or whatever it is to do that. But because we set our leases up different, we can do that. And that's where a friend of mine, Rael Kelly, who's a business coach, one of his great things that he says is, everything we believe to be true is true until it isn't. So you think your lease needs to be written. You think your lease needs to be written one way? Well, that's true until you discover that it isn't true, and you can actually do things differently.
Yeah. Interesting times for sure. When we look at, first and foremost, we've talked, REIN's taught this for 30 years, which is, we're not about speculating. We're about investing. There are no bad real estate markets. There's just poor choices of strategies within whatever market you're trying to operate in. And, many people get shut down because they, in fact, can't, their backyard doesn't work, their city or their kind of hood, if you will, the math doesn't work. But in reality, any market will work. You need to adjust your strategy and your tactic to make it work. I love what you said about leases. It's about treating your real estate investing like a business and actually paying attention to the details and following a system, following procedures that you have and that you're paying attention. It isn't about setting it and forgetting about it. That's not how you are successful in real estate. Now, when we look into 2024, Keith, we're going a little bit long, but I do want to ask you this question because everybody wants to know, what are interest rates going to do? Come on, let us know.
Well, so for variable rates, I think we'll see maybe a quarter point early Q2 of 2024. And then nothing else probably until end of Q3 or early Q4, maybe another quarter, potentially a half. Depending on how we see things play out. That's what I expect on the variable rate side. On the fixed rate side, we've seen the bond yield soften. We've seen rates coming down in the last 3 weeks. So we're in that realm that things are getting better. But we have to keep in mind how the government has changed policy for how much banks can lend against deposits. So we're not going to see fixed rates come down in the same way we would have before, because they're taking a larger margin to make up for the lesser amount of money they can lend.
Now, I've heard rumor, I don't know this to be true, are some investors seeing a 5 in front of their mortgage, like a 5.95? Yeah.
Yeah.
Anything? Yeah. Great.
Yeah.
So much better than 7 or 6.8.
We're going to go sign a 3-year renewal at 5.35.
5.35. Look at that. That reminds me of 06, 07. Back in those days. Keith. So interesting that things are changing. So, folks, if you're looking for some mortgage support, Keith with Enrich Mortgage is, of course, an expert in that, works with investors, works with home buyers, but ultimately you've been doing this a long time. Keith, you yourself are an investor. You're qualified right across the country to give mortgages and set people up. You're a brilliant coach in terms of helping people set themselves up for future, because you're very strategic. It's like getting mortgages a little bit like playing chess. You got to kind of move the pieces in the right place and make your moves with some thought, and you're supporting people in doing that.
Absolutely. Yeah. It's one of the things, what I love in a conversation is when I can take that conversation and at the end of it, the person says, I never thought of it that way. Then we know that we've cracked the egg. And now there's room for expansion and understanding.
Yeah, lots of people they tell themselves stories about, I will never qualify, I can never get a mortgage. Oh, we've heard these so many times over the years, Keith, and we know them not to be true. So, folks, I'll leave you on this note. For 2024, clarity equals velocity. Keith's the man to help you get clear on your financing needs and maybe how you can set your portfolio up for success. And one final word that I'll say, a famous quote by Wayne Dyer, which I love: when you change the way you look at things, the things you look at change. And that includes real estate, it includes economy, and it definitely includes how we get mortgages. Keith, thank you so much for your time and your wisdom.
Hey, thank you, Patrick. Merry, happy New Year to you and Stephanie, and have a great one.
Thanks, pal.